In today's video, we jump into the foundation 2. I believe in the last class we finished foundation 1. So basically we're telling you what foundation 2 entails. Alright, so in this foundation 2 of today's class, we'll be talking about the Forex market hours. Right? Forex hours. Talking about what spreads are, spread in the financial markets. Okay, so these are basically the two major things we'll be looking at, and then we're talking about what pips are, pips and points, then leverage. Look at leverage as well. Leverage. I think these are the major things. Right? I think these are the major things that we should be looking at in today's class. Then okay, yeah, we could add lot size to the list. Lot sizes. Because lot size is basically a foundation. In fact, if you miss lot size, I don't know what you need to learn anymore. So we're going into the Forex hours. So basically, I think in our last session, in foundation 1, I told you guys that the Forex hours is open from Mondays to Fridays. From Mondays to Fridays, right? During banking hours. Now the first market opens by 12 Friday and then ends by 12. Literally, let's see 11:59. Yeah. 11:59 p.m. and opens by 12 o'clock a.m. on Monday and then closes 11:59 p.m. on Friday. Alright, so now there's what we call trading sessions, which is still under the Forex hours. Right? Sorry, let me just dust this place up. I believe you already have them. Leverage, pips, don't worry, I have them all, so I'll just spread. Let me just leave this one here. So basically, I said these what we call trading sessions, right? So the trading sessions, there are basically 4 trading sessions that we have. We have the Asian session. We have the New York session. We have Sydney, SYD, NPY, and then we have the London session. Okay, so these are just the 4 main characters. If you notice, they all more or less like represent a continent, right? Asia, New York represents the North American continent, this one represents the European continent, and then this is the Australia. So they basically represent the major continents, right? And each of them here, right, they have a particular currency that stands in for them. One truth is, under the Asian continent, right, we have different currencies here. Like the Chinese one is here, the Japanese yen is equally here as well, right? So but each of them have like a peculiar currency that stands out for them, except for the London session though, but I think you get the check though. So the Asian session, I told you, each of them have their own trading time. Okay, so the Asian session literally starts in the midnight. Okay, well, this depends on the country you're going to watch this from. So we'll be using the global meridian time, GMT. So I think the conversion to your own local time frame will be much more easier. Okay, so for should we start with the Tokyo session? Yeah, let's start with the Asian session. So the Asian session is characterized by I said Japan, right? Japanese yen, that's JPY. This is like the leading pair for this currency, and then the trading time starts from 12 a.m. literally, and then ends by 9 a.m. as well. Okay, then the New York is characterized by USD and starts from 2 p.m. to 11 p.m. That's in the midnight. Then the London session that's characterized by GBP. And then it starts by 8 a.m. to 9 hours from 8. I think that should be like around 4, so 4 p.m. if I'm not mistaken. Right? And then, the Sydney session characterized by AUD. This starts, I think, from 11 a.m. to what time does it end? What time does the business session end? Basically we add 5, if you add 9 hours, I think it should be to 7 p.m. If you notice something, right, all of them have an additional 9 hours to their time frames. So if you add 9 hours to literally any of these time frames, okay, that means this should be 5 then. Sorry, my bad, this should be 5. So if you literally add 9 hours to each of the times that you have listed here, you'll be having what you have here. So basically, even if you don't know the end session, if you only know the beginning session, just add 9 hours, and then you'll be able to get to your end session. Okay, you'll be able to get to your end session. So that's basically it. Okay, I think this Sydney starts from 10 p.m. How am I making clumsy mistakes like this? Sorry. Starts 10 o'clock p.m. to 7 o'clock a.m. Yes, sorry, I think this is looking better. Yep, this is 5. So let me cancel this. So basically, why we have trading sessions is because this is what we call liquidity. Right? So if you're trading with the session, there is higher tendency of market or the price having more liquidity in that particular session you're trading. Right? Like if I want to trade a pair, like USD JPY for instance, I'm going to always want to trade at the open of the Asian session, or when the New York session is opening. Why? It's because these are their times. So I don't want to be trading USD JPY in a Sydney session. It doesn't make sense. Alright? There's going to be like literally zero liquidity, and then you'll be trading in a ranging market like this. Right? Because there are literally zero participants at that set time in the market. So would you want to be trading a ranging market? No, you want to trade a market that has a trend, a direction. Okay? So that's why I don't want to trade outside a session. Okay? So this is it for this though. So if you want to trade any pair, let's say you want to trade GBP USD for instance. I said the timing is in GMT, so you can adjust it to your country's time, whichever one do. So for most people out there, they normally trade Euro USD, or GBP USD. Now the best times to trade, you always want to trade when there is an overlap or an overlap between the New York and the London session. I think the London session starts from 8 a.m. right to 5 p.m. I hope you guys are with me. The New York session starts by 2 p.m. to 11 p.m. So basically, you want to trade between when the London session is open and when the New York session is equally open. So you're looking at trading from, let's say from 1 o'clock, because that's when the New York session is prepping to open, right, to 6 o'clock. That's when the London session has fully closed by 5 with an additional hour. So this is basically the best time to trade, from 1 p.m. to 6 p.m. If you notice, all the US news comes out, okay, most of the US news comes out by 1:30, right, 1:30 p.m. Like we have the NFP, we have unemployment, and don't worry, when we get fundamentals, you understand. Alright, so this is basically it. So that's why you want to be trading with the sessions at that particular time. Okay, you don't want to be trading GBP USD in an Asian session. You don't want to wake up around the early hours of the morning to trade Euro USD. Doesn't make sense because there's not going to be any liquidity. The pair you want to trade then is something like USD JPY or any other pair. Okay, there are lots of other pairs out there. There's CAD, Canadian dollar, it's equally a good pair. CHF, Swiss franc, CHF. Okay, I've listed AUD there as well. So you can get pairs like this, like these particular. These are the major pairs, though. Some people do trade other external pairs, but these are the major ones, right? That have like very good liquidity and lots of opportunities for traders like you and I. So this just basically is for trading sessions, all right? Please, if you have any questions, you can feel free to go back to the start of this video and then get to like just get back to the start of the video and then watch where you got lost in. All right. So now we're moving to the next topic. The next topic is I think spread, right? I think spread was the last one. The next one. Yes, spread. Before we come to lot size, SPREA, like literal spread that we know. So what is spread? The spread is basically the difference between the ask and the bid. I know it sounds confusing. Let me walk you through. So if you open your MetaTrader for instance, or whichever broker you're using, I already told you guys what broker is, so I don't think I should be going back there. Let's say you want to trade Euro USD, okay? And then you have something like this, 1.1150, and then 1.1154. I hope you can see this though. This is literally the spread. Oh God, I'm sweaty. This is literally the spread, right? The spread is the difference between the ask and then the bid. Okay, so which is the difference between this and this is 4, right? This is 4 pips. I'll tell you how to calculate pips so maybe you understand. But this is 4 pips though. So the difference between the ask and the bid here is 4. This is the ask and then this is the bid. It's 4 pips. Why? Why is it 4 pips? Or why is it like this? Why is the spread like this? The spread is basically triggered by your brokers. Some brokers don't collect commission, they don't do anything. So basically the pips is where they actually make their own cuts of profits from. So it's always wise to look for a broker with low spread. Some people tell you out there, oh, look for a broker with low spread. This broker has in this spread, and then you're like, what spread? This is spread. Okay? So if that means if I'm taking my trade, if I'm taking a sell trade, for instance, let's say I want to sell Euro USD. Okay, I want to go for a sell on Euro USD. I want to go for a short. Now instead of my trade to start reading from the initial, let's say the initial level of Euro USD is at 1.115. Let's say 50. Right. Now let's say the initial. Let's turn this to 9 because mostly you always have a spread of like 9. Right. Let's turn this to 9 so that it will be 9 pips difference. The spread 9 pips. Okay. I didn't do anything. I just changed this last value to 9. So if you minus, you still get the same 9 pips, just like how we had 4 before. So let's say you want to take a short, and then this is the current market price, CMP. That's current market price. This is current market price of Euro USD. And then you book for a short. Now what will happen is your broker, because of the pips, because of the spread, right, which is 9 pip, they will book your shorts instead of this from here. They'll book your shorts from 1.1159. Okay, they'll book your shorts from there. So if the market is going up, for instance, if it moves by, let's say, 3 pips above, this is where literally your entry point will be from. Okay, start reading from here. So that's why in every trade you always read from minus. You cannot enter a trade and be reading in plus, except the broker has 0 spread, which is literally impossible. Because then how would they survive? Except you're paying them high commission or something, right? So if it moves up with 1 pip, in fact, if it moves down with 2 pips, you will literally still be in losses. Okay, if this moves to 1.1148, you still be in loss, but it's going down. Even if this moves to 1.11, let's say 42, this is 8 pips being moved down to the downside. You're still going to be in little loss. Why? Because of the spread. You're trying to accumulate, you're trying to cover the spread for the broker. Okay, that's why it's always advisable to look at brokers that have low spread. Now, if you're trading any pair, you put your MetaTrader, you see the spread here. It's like, you see like an inverted pin, something like this. Right, and then you see it's either 9, 10, some 22. Depends on the pair you're trading. Like something like BTC, I think you read in its hundreds or something like that. Okay? Right? So I guess this has covered for spread. So this is just basically, you can open your MetaTrader and check it out and see. Then maybe pick your demo account and then book a trade. Right? It's always going to start reading from the minus side. So in case you see your trade, you open a trade and it's reading from minus, don't panic. It's just how it is. It's how it operates. Okay? So after spread now, we're looking at pips. I mentioned pips to you guys. You didn't really, I don't know if you did understand it. So what are pips? Pip means price in points. Price in points. I don't know what's wrong with these markers. Let me try this one. Price in points. Now, this is a standard method of movement in the financial market. Okay, this is how you can literally, this is what you can use coupled with lot size to know the amount of money you're generating. That's one. And then know the distance driven from the points, from your significant point of interest to your point of exit. Right? That's POI to your TP or SL zone. Don't worry, we'll still get there. So, price in points hashtag PIP. So let's say for instance, let's use the same instance, right? We drew our charts. We had our Euro, EUR, USD, right? And then let's say we have an entry of 1.1130. Let's say we have a chart. Let me just draw a rough chart to the upside, for instance. And then we have an entry of, this is our entry point, 1.1130, right? Now, if you want to calculate pips, you're going to see like a raised power that's on the home page. But if you're entering the main chart, you're going to see an extra number. So it's going to be 5 values, right? 1.1130, let's say 4, for instance. Okay. Just for beginner's sake, just neglect the last value you see and start your calculation from this, right? That's the fourth placed value after the point. So you just neglect the last one for now, for your own sake, so that you easily understand it. So let's say this trade now moves up, right? Let's say it moves up to this point. Let's say here is 1.1135. What this is trying to say is that price has moved with 5 pips, because from 1.1130 to 1.1135 is 5 movements. Okay, so here we could have like 1.1131, 32, 32 here, 33, 34, and then 35. Then let's say up here, right, is 1.1147. What it's trying to say is that from here, from this region here to this region, price moved with 17 pips. Why? Because if you add 17 to this, right, 1.1130 plus 17, this is 7, this is 4, 11.1. You see? So that's why it's 17 pips that price moved with. Okay? So this is basically how you calculate pips. Now this is to the upside. And then if it's to the downside, if it's here and then you have 1.11 to the, let's say 25, which is from here to here, is still the same 5, it's 5 pips. You lost, you had, if you're going for a buy, this is 5 pips you're setting. Let's say you want to set your stop loss here. This is 5 pips. So there's nothing too crazy about it. Okay? So I know some of us still get confused. You're here, oh, 10 pips, target 10 pips as your take profit, target 30 pips as your stop loss, and you're like,